we have some very important news surrounding UnitedHealth Group that we need to look at that was just released. Now, if you aren't familiar with UNH, the stock is down about 36% in the last year, and really all of that comes just in the last couple of months. Just in mid-April, the stock was trading as high as around $600 per share. So it has seen an immense sell-off in a short period of time. And historically speaking, this has been a company that's outperformed the market. If we look at the past 10 years, despite the massive sell-off over the last couple of months, it's still up over 154%. And if we look at this stock from a dividend perspective, it's been a phenomenal dividend grower. All this data will automatically load in thanks to the help of the Ticker Data add-on in Google Sheets. Like always, you can download Ticker Data and get access to any of these spreadsheets by going to tickerdata.com at the link in the description. But if we look at the 10-year dividend growth rate for UNH, it's above 16%, the 5-year right at 12%. So phenomenal dividend growth. We can see the history of dividend growth right here, going from $1.41 in 2014 to now $8.18 in 2024. So again, just phenomenal dividend growth that's been backed by growing free cash flow. And if we look at that starting dividend yield sitting at 2.75%, which is interesting because if we look at the dividend yield history for the stock, that's pretty much the highest the stock has ever seen its starting yield. So is there opportunity with UNH stock? Well, before we really start to dig into things, let's talk about all the bad news that's been surrounding UNH stock lately and the reason for the huge sell-off we've seen in just the last couple of months. I compiled all the major news that's negative for UNH over the last year or so. So let's start with number one. In February of 2024, UNH saw a massive cyber attack. Obviously, this was not good for public relations. It had over $2 billion in direct costs and caused widespread delays in claims processing. And this made an impact on the bottom lines. If we look at UNH on the stock screener, come over here and look at the earnings per share. We can see from 2014 to 2023, it was really phenomenal growth, high levels of growth, very predictable growth year after year. And then 2024, we saw a huge drop back all the way down to $15.51. This was due to that one-time cybersecurity cost. So, I mean, we're talking about a big deal here. Now, the good news is it was one time. This isn't something that's going to continue impacting the company's bottom lines moving forward. So at that point, obviously it wasn't good news, but investors weren't too concerned. They were expecting earnings growth to resume at a high rate in 2025 and 2026. But then later that same month, we saw the Department of Justice launch an antitrust investigation into UNH's acquisition of Change Healthcare in early 2024. Just a few months later, we had the news and the negative PR around their CEO being unalived. And then let's get to the very recent news in April. The company had a disastrous Q1 earnings and lowered their guidance for the full year. On top of this, the Wall Street Journal released an article in May stating that the Department of Justice had opened a criminal investigation into alleged Medicare Advantage fraud, and this caused a huge sell-off in the stock. And right around the same time, the CEO, Andrew Whitty, abruptly departed. So obviously, all these three things hitting right around the same time caused a huge panic for investors. And it's quite easy to see why. And in my opinion, the most important thing we need to look at is right here, this criminal fraud investigation. Is there any truth behind this? Because if this is true, UNH could certainly go lower. But let's talk about what we've been seeing from UNH lately. To start, I want to look at the history of insider purchases from UNH over the past few years. With the exception of 2019, UNH typically has less than $1 million of insider purchases in any given year. It's pretty rare to see a lot of insider purchases. But in 2025 already, we've already seen $32 million worth of insiders buy stock. We've seen insiders like the CEO, the CFO, buying massive quantities of shares. This is something that should give us confidence. On top of this, we need to look at the recent news surrounding UNH. Just a few days ago, the Capital Forum put out an important message. And if you aren't familiar with the Capital Forum, it's basically an investigative news and policy analysis service based in Washington, D.C. that focuses on things like antitrust and regulatory investigations. And they just released some very interesting news that seems to be slipping by the mainstream media. Look at this here. Top Department of Justice Antitrust Division officials, inspired in part by President Trump's recent executive order targeting lower drug prices and comments criticizing the role of healthcare as middlemen, are considering a change in the direction of the department's investigation into UnitedHealth Group to focus on the company's pharmacy benefits management unit, sources familiar with the matter said. The UnitedHealth probe, launched under the Biden administration, originally focused on the company's acquisition of healthcare providers and how those acquisitions, when combined with other conduct, could violate the Sherman Act's prohibition of monopolization. Okay, that was a mouthful. What exactly does that mean? Well, to put it quite plainly, the Department of Justice is refocusing the antitrust probe into UnitedHealth away from general acquisitions and toward its pharmacy benefit manager business. So the original investigation, which was launched under the Biden administration, focused on the potential monopolization behavior of UNH due to their acquisition of healthcare providers. But the DOJ is moving away from that. That's great news for UNH. After over a year of searching, they weren't able to find anything. And on top of this, Department of Justice staff who believe a shift in the investigation's focus would lead to their earlier work on the probe being shelved, sources said. What does that mean? The Department of Justice officials fear that pivoting to the pharmacy benefit manager side of the business will weaken the case, which again is great news for UNH stock. So this is a much bigger deal than I think a lot of people seem to realize. And then on top of this, we have more good news surrounding UNH stock. Senate referee rejects key Medicaid provision in Trump's tax bill. If we come down here, we can see there's a provision in the big beautiful bill that was designed to restrict states' use of Medicaid provider tax. Basically, the Medicaid provider tax is used by states to draw down more federal Medicaid funding, and cutting or restricting it would reduce how much federal funding states receive for Medicaid. Now, we have to remember UNH has a large Medicaid business, and so because this was rejected, they're able to avoid a huge revenue risk. This is basically another threat removed for UNH. So that's two key items that are both great news for UNH stock right now, but even with that being said, if we look at the stock in the last month, it's only moved up about 4.8%, when just about a few months ago it was trading at $600 per share. So is there still opportunity with UNH stock? Well, let's look at a few different valuation scenarios and valuation models. And to start, whenever we're talking about what I guess could be called a turnaround play like UNH, I think it makes a lot of sense to use a reverse discounted cash flow analysis to see how much growth the market is pricing into this stock. So in this example, we can see if we assume 0% free cash flow growth, UNH is worth less than $250 per share, but the current price is around $310. So how much growth is being priced in? Well, if we plug in 2.5%, we can see we start getting very close to the current share price. So what the market is telling us is there's about 2.5% annual free cash flow growth priced into UNH over the next decade. Now, compared to how they've historically grown free cash flow, that is dramatically slow for the company. Again, look at free cash flow per share from 2014 at $6.79 to in 2023, $27.67. That is double-digit free cash flow growth. So that projection certainly seems on the low end. Now, one of the questions we might need to ask ourselves is what projections look like from analysts? What does the average projections from analysts actually look like? And with ticker data, we can actually pull that straight into our spreadsheet. Let's come up here and look at UNH. Again, this data will load in, but what we want to focus on is down here. Again, with ticker data, this automatically imports into our spreadsheet. All it's doing is taking the average EPS estimate from analysts from the year 2025 all the way to 2029. Now, what we can see is the growth from 2024 to 2025 is actually projected to be about 42 to 43%, which seems really high at first glance, but we have to remember that's because EPS in 2024 was lower due to the one-time cybersecurity cost. So obviously, yes, EPS is going to take a pretty big jump up, but it's actually still not back to that 2023 levels when they were at $24.12. So again, $22.16, still lower than 2023 levels, but a nice jump back up from the one-time cost. After that, they're still projecting very solid EPS growth, 15%, 15%, 22%, 13%. So the average analyst estimate has 2029 EPS at $40.83. So something isn't adding up here. The average analyst is easily projecting double-digit earnings growth, which likely means double-digit free cash flow growth is priced in, especially if we jump over to the free cash flow analysis sheet and look at UNH. And what we need to look at is free cash flow conversion. It tells us how well the company translate earnings to free cash flow, and they do so at a very high rate. So if earnings are projected to grow at a double-digit rate, that means we should expect free cash flow to grow at a double-digit rate. But like we just saw, if we look at that reverse DCF model, the market is only pricing in 2.5% annual free cash flow growth. That seems like a pretty interesting opportunity there. But what's the actual valuation look like? What's the price point? What is the company actually worth? Well, let's jump over to the stock valuation sheet and look at a few different valuations. The first one we will look at is going to be Graham's valuation. Now, Graham's valuation is a model invented by Benjamin Graham, Warren Buffett's mentor, and it basically values a stock based on its future earnings growth projections, while also taking into account current market conditions by looking at the current yield on AAA corporate bonds. So the first thing we need to do is our estimated EPS for 2025. And again, with ticker data, we can actually easily import that into our spreadsheet. We'll just select UNH, select estimated EPS average, and then we want it for 2025, and I'll hit enter. and we can see it's coming in at $22.16. So I'll plug this in, and then we'll go with an EPS growth rate projection that, again, we're going to go based off the average analyst estimate of 16.5%. So we're not being too aggressive, but we're not being too conservative. We're just using that average. Once we apply the current yield on AAA corporate bonds to this, we come to a fair value of $413.60, which is considerably higher than the current share price at $309.40. And even with that being said, I want to point out that the current yield on AAA corporate bonds being at 5.54 is certainly driving down this valuation by quite a bit. If we look at the historical rate of AAA corporate bonds since 2013, we're sitting at pretty much the highest we've been at 5.54, which again will drive down this valuation. Now, if we keep moving forward, let's look at our discounted cash flow analysis. We'll go ahead and zoom out a little bit, and again, we're valuing the stock based on how much free cash flow it's going to produce in the future. And if we just go with a very, very modest growth rate projection for UNH of 8%, which is quite a bit lower than most analyst projections, again, we'll use that growth rate to find the future free cash flows of the business, take the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, subtract out total debt to get equity value, divide by shares outstanding. This would give us a DCF price per share of $484 per share. That's about 56% upside from its current prices. And then of course, if we look at the stock from a historical multiple valuation, what has the stock's historical PE ratio looked like compared to where it is right now? And we can see on average over the last decade, the PE ratio has been about 22.87, and it's been relatively stable with the exception of it climbing a little bit higher in 2021. So pretty close to around 23. But if we look at the PE ratio for the trailing 12 months, it's sitting at just 12.85. And if we look at it on a forward-looking basis, based on the forward-looking earnings, we can see Seeking Alpha has them at just 13.66. So compared to how they've historically traded, they're trading at a steep discount. Now, this is to be expected because there's a lot of fear priced into this stock right now. But the PE ratio is about 44% lower than its historic average. And then finally, if we look at them from a dividend discount model perspective, we'll zoom in just a little bit more so you can see what's going on. But again, we're just valuing the stock based on how much it's paying out in dividends and how much that dividend will grow in the future. And like we've already pointed out, historically speaking, dividends have grown at a very high rate. So if UNH can achieve just 7% dividend growth moving forward, quite a bit lower than the historic average, the company's actually worth about $607 per share, which is about 96% higher than the current share price. Now, I know that sounds ridiculous, but again, I want to point out, just a couple of months ago, the stock was literally trading at $600 a share. So if we go ahead and jump over to the output tab, what we can see here is three valuations averaged together gives us a fair value of about $501.54, which when we look at the current price, it's about $309, so 38 to 39% lower than the intrinsic value. So with a 10% margin of safety, your acceptable buy price would be $451, giving you a buy signal. But this is obviously a scenario where this doesn't paint the whole picture. Based off the numbers, UNH is clearly a massive opportunity. It really all hinges on one thing: whether or not the Department of Justice is going to find criminal fraud. Because if they do, there's really no telling what the consequences could be. And with that being said, I think the stock could certainly go lower if that were to be the case. But from the news we've seen today, with the insider purchases ramping up significantly in the last year, with the Department of Justice having to pivot to a new focus, this all seems to be very good news for UNH stock. Now, as investors, we still need to be aware of the risks. This has certainly become a high-risk, high-reward play. But based off what we've seen over the last few weeks, the news surrounding UNH seems to be trending in the right direction. So go ahead and let me know what you think of UNH stock in the comments down below. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets, it allows you to automatically import stock financials straight into your spreadsheet. Then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.